Good day and welcome to J-WIC FX online tutorial. Today we are going to go straight into our trading strategy. What trading strategy do I use? I use this trading strategy called Smart Money Concept, in short SMC. Anytime you get into the market, I want you to gain clarity. Make sure you know what is going on in the market. Make sure you understand. If you don't understand, it's better you just stay out. If not, you're going to take actions that you might likely regret at the end. So you just need to gain clarity, and simplicity is key. Keep everything simple as possible. Simple as possible. Don't begin to complicate things for yourself. Now, I have 4 things mapped out, 4 very important keys mapped out in this strategy that you need to know. First, we have directional bias, and under directional bias, we have the market structure, which you see the bullish structure, bearish structure, and your ranging market, your range structure. After that, the second point there is the zones. These are areas, point of interest, where you likely want to take actions. In doing that, also you also have inducement and liquidity. You need to spot out market traps where the market will likely want to take retail traders money. You need to spot that. If you don't spot liquidity, then you might beat liquidity in the market, and markets take your money and continue with their trend. Okay, the last thing there is how do you enter, your entry mode. You need to know how you enter, when you begin to buy, when you begin to sell, and things like that. So keep everything simple. In this video, we're going to start first with your directional bias. So I'm talking of market structure, a bullish structure, a bearish structure, and a ranging structure. So let's go to the chart. From 4 hours to 15, I have basically 2 major time frames I use in the market: your 4 hours and your 15 minutes. Most of the times, if 4 hours is not clear, then I can go down to 1 hour time frame to seek more clarity. So when time you get to the market, guys, gain clarity first. Go to the main context of the market. In looking at GBP USD from 4 hours, I can see a very beautiful bullish structure from here. I can see that. Let me make you see it now. Market structure. Under market structure, I have the bullish structure. We can call that an uptrend. Okay, when the market keeps making higher high, higher low, higher high, higher low. We also have the bearish structure. The first one was bullish structure. The second one will be bearish structure, where you now have lower high, lower low, lower high, lower low. Then ranging structure, in which the market doesn't give an higher high, doesn't break the up or down, it's just moving in a horizontal manner continuously. So let me draw that so you guys will understand better. The market structure, for a bullish structure, we have this. All right, let's stop here. This is enough. So the market will keep breaking the current higher high to form a bullish structure. The market, listen to this, the market will keep breaking. I'll explain the key things that you are going to use to note out this break of structure. It have to keep breaking a higher high, and after it breaks a higher high, form some pullback to make a higher low. Continuously like that, you keep getting a bullish structure. And this place, let's say we start off here, H8 for higher high. Keep H8 here represents higher high. Okay, let me use this small letter here, higher high. While HL here will represent higher low. Okay, this is supposed to be a higher high. Sorry. Okay, now the market will have to keep breaking the higher high, which is HH, and forming new higher lows in movements, in motions. Okay, you have this first higher high. Let's say the market started from here. You have this first higher high. What you want to see the market doing is to break it. Now, I keep saying break. How do we know the market has formed a new break of structure to the upside? That's in knowing this, I don't take candle wicks for a break of structure. A body of the candle must close above the current higher high you are seeing there. The body of the candle must break above the current higher high you are seeing there to confirm that break of structure. Aside that, it is no more, to me, on my own strategy, it is no more a that's if it's not a candle, a body of the candle that closes above it. If it's just a wick, to me, it's not a solid break of structure. Why? Because most of the time, the market will likely want to grab liquidity, want to just take retail traders' money if it's on a bearish moment, or if it just wants to form a simple pullback, just want to take that money, then begin to pull back. So you won't want to fall into that trap. What you want to wait for is a close of a candle above The body of the candle must close above the current higher high. Once the candle closes above that higher high, you are having a beautiful break of structure at that point in time. All right, so after breaking it forms a new higher high, which is what you have here. From this new higher high, guess what? Once it forms a new higher high, it pulls back, forming a new lower low. Continuously, if the market should break above the current higher high you are seeing here, which is this, now breaking, what to form that real break of structure will be what the body of the candle must close above the current higher high you are seeing there, right? That will form a solid break of structure. What do you expect again? You want to see a new higher high forming there, pulling back, creating pulls back, create a higher low. Now your anticipation, your speculation that since the market has pulled back to maybe a 50% Fibonacci, or you can see a clear zone there, we'll explain that in other videos, it has pulled back, made some good change of characters, which we are going to explain later. Something like that, you are expecting the market to break, beautiful break of structure to the upside again. That is what you want to have there. And you keep seeing this. You see this the first time, you see this the second time, you should begin to speculate wisely. Okay, we're in a bullish structure, we should start anticipating this way and going up, keep going up. What forms that solid break of structure, guys? A body, a full close of the body of a candle. It must close above it. It must close above it. Let me pick a beautiful example here. From here, just want to give a little scenario. You can see this. Initially, I won't pick this white bearish candle as a complete break, because that's just a week, until the bullish candle closed above it right here. That's when I can say, all right, this is a solid break of structure to the upside. Then from there, we begin to anticipate. We are going to read that chart later. So this is what forms a beautiful break of structure, a bullish structure, sorry. You should have break of structures to the upside with the markets forming new higher highs and higher lows. It's that easy, guys. Don't make it complicated. Just get this. If you can get if you can get the market structure, very clean, very good, okay, then you at least are having a 50% chance of knowing what to do next. If you can't get the market structure at all, like you literally open your chart and the market structure is confusing, you are just so confused in what you're seeing, stay out of the market. Just stay out of the market. Clarity is key. All right, now this is for a bullish structure. Let's go to a bearish structure. Now, if the market on a bullish structure forms higher highs, higher low, on a bearish structure, we're going to be talking of lower highs and lower low. You have the LH, lower high, and we also have the lower low. Yes, now it's just like a vice versa of your bullish structure. Now on your bullish structure, you keep forming higher highs, higher low. And your bearish structure, you'll be forming lower highs and lower low. In the bullish structure, you're breaking structures to the upside. In the bearish structure, you are going to be breaking structure to the downside. You're going to be breaking structures to the downside. Let me draw this. Pull back, break structure, pull back, break structure, pull back, break structure continuously. I think we can stop here for now. So what can you see here? You have your lower high. Let's start from here. You have your lower high here. Let me just put LH. Good. And this was the previous lower low, or the lower low it formed. All right, what do you want to see the market doing? The market should break structure to the downside, break that lower low. If the market breaks that, remember, what do you use to confirm a valid break of structure? This should come up. What do you use, guys, to confirm a valid break of structure? What we use here is a full body has to close. In the case of bearish, now it has to close below it, below this break of structure. It has to close the full body of the candle has to close below it. If it's a week, just wait patiently. Don't be into a rush. Don't go into the market at that point in time. If not, you might make a mistake. After that, it pulls back to form a new lower high. Okay, what are you anticipating next? This is the lower low the market have. You want the market after that pullback to continue in the trend to come and form a new break of structure to the downside. Is that easy? Is that easy? Continuously, you want to see the market forming that. Okay, you have your new lower high, right? That's after it has pulled back from this current lower low. You map it out, then the market should make a beautiful break of structure. So what would I like to do in this other case? They repeated itself. What would I like to do in this other case? Get my zones. Since I know the market will pull back, right? Going for a beautiful bearish sell. Where am I aiming? The next lower low there. That is it. That is it. That is it. That's just for reading structures. Don't go far yet from this lower high. All you want to see is a break of structure to the downside. Confirming that break of structure, you should see the close of a body candle below that range. So this is for a bearish structure. A bearish structure. Now let's go to a ranging structure. So we've studied the bullish structure and bearish structure all under 4 hours time frame. I said from a higher time frame, you need to understand the structure of the market before you begin to take any action. Understand the structure. If you don't understand the structure of the market, just stay out of it. So for the ranging markets, you neither have break of structure to the up or downside. The market just keeps moving in a horizontal manner. On a lower time frame, I'm going to teach you how to use range, mostly in institutional trading, AMD, accumulation, manipulation, and distribution, to pick out zones. That's one of the ways I've mastered in picking out zones. You can also use Fibonacci retracement, which also gives beautiful zones. And Fibonacci retracement, when you use that, you're also going to see more of accumulations in that place. More of accumulations. So I'm teaching more of some ranging markets in a lower time frame now. Okay. So this is a ranging market, most likely forms in a kind of box where if you trim your eyes very well, you can see that okay, this is kind of a box something. It might not be that easy in the market, but with time, when you keep practicing, you are going to get it. So it's neither breaking up, it's neither breaking down, it's just in a range. So this is what we call the ranging market. I do have a strategy in trading this type of structure, which I call the box model. I usually trade that in BTC thereabouts. So these are the three structures we have. So watch out for the next video where I'm going to be talking about the bullish structure, and we're going to try this on a chart, on GPW USD chart.